8:58, and it's Wednesday, July 7th. Half the year is gone already. Crazy. Hopefully everybody had a great 4th of July weekend here in the States and internationally. I know we have folks from all over the place in the event today. Hopefully you were able to sneak out and get an extra day off and celebrate as well, or at least have a nice weekend. I'm going to expand my chat box to get started. We're going to get started right on time, guys. So hang tight, bear with me. We got another minute. I'm going to pop open the full risk disclosure screen. It's very important. We need to talk about that before we get started. We have a New Yorker here. Love New York. What part of New York? Type it in. I am broadcasting live from the NinjaTrader headquarters in downtown Chicago. From those of you who were with me yesterday, you know, I had to be at home yesterday and did the presentation, and we had what sounded like an air raid siren going off, freaked everybody out. But I don't know what it was, but we're not going to have that problem. We're not going to have that disruption here today. All right, it is officially 9 o'clock Brooklyn. Love it. Let's go ahead and get started here. Again, my name is Jim Cagnina with NinjaTrader. I'd like to welcome everybody here today. This is our regular Wednesday event. We're going to continue doing them on Wednesday. We got John from Southern California here. Awesome. And I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that can be an equation for opportunity, also equation for risk. So be careful. Only fund your futures trading account with risk capital. If you're not sure where you fit on the risk capital curve of things, reach out to us. Reach out to your customer service rep here at NinjaTrader. Everybody here is, passed a Series 3 examination. We're registered with the CFTC, NFA members. And almost as important, maybe more important, we literally talk to traders all day long, and we look at charts and markets and day in and day out. So there's a deep breadth of experience here. Feel free to reach out. That's all a free thing, right? You don't have to be a customer to contact us or anything like that. So feel free to do that no matter where you're from. I'm here super early in the morning, I'm almost here 9-10 hours a day. I'm easily reached. I'll type in some information on how to get a hold of me. We're going to be on a real-time practice account today, and we're going to be looking for some trade setups and talking about the markets a little bit and technical analysis, as well as just some global economic stuff that's going on. Roberto from Brazil, welcome. Sweet. I'm glad you're here. Thanks for coming. All right, I'm going to move this. We'll talk about how to get a practice account and all that stuff later. Let's just jump into it. So the thing I wanted to really, yesterday we ended up with a long position in the micro NASDAQ, and I kept it on the screen because I really wanted to, it really helps kind of tell the story of how the potential for the micro contracts, right? It gives us the ability to do a lot of different things that we wouldn't ordinarily do in a classic size contract, especially the NASDAQ, right? It moves a lot, and if you don't have a big enough trading account, it presents different kinds of challenges, right? So with the micro, though, we have a lower overnight margin requirement, a lower day trade margin requirement, and be careful with the day trade margins, but it gives you the ability to hold positions for a longer period of time. And so just taking a look at let me just kind of move this up, the NinjaTrader platform here, we literally, it shows me where my long position was from yesterday, right? We just carried it over, and it kind of paints it on the screen, right? It paints it on the chart itself, and you can see, okay, so we're long one contract. Long means we bought one, right? If we would be short one contract, we would have sold one. And it's green, it's color coded, it shows the size, and then the number of ticks that were up or down. And that's kind of moving, it's dynamic because the market's moving, right? So that's, the price was 14,723, right? And so I went to bed last night. You didn't have to worry about it so much. My P&L is, $176 on this one contract, right? Again, past performance, not indicative of future results, but this is just kind of an example of just leaving the position on. I felt pretty pretty good. You know, we're in a bullish state, right? We're in a bullish state in the stock index futures markets, at least until, you know, the Fed minutes come out at 2 o'clock today. We'll talk about the Fed minutes a little bit later. And so, you know, then I just, you know, I have a stop loss here that I put here earlier this morning. And the stop loss really was based on the volume profile at the time, where you know, I kind of looked at the area between the value area and prices below value, and it's changed since this morning. But that's where we initially went ahead and put our stop loss, and we're getting close to hitting that right now, by the way. But it's color coded; you can see it right there on the chart, and it's just basically a market order stop, right? So it's best practices. Always have you know, always put a stop in, even if it's a catastrophic stop. Put it in. It's best practices, and it'll help give you number one, a peace of mind, and number two, protection, right? You know, you anything and everything has happened and can happen. Okay, so there we go. We got stopped out and we have a flat position, and all is good. The stop worked exactly how we wanted to do it, how we wanted to do it, and we carried the position over for about 24 hours, right? Which means overnight margins kicked in. You know, the exchange offers overnight margins. It's not a brokerage thing; it's an exchange thing. And the weird thing about it is it's only an hour long, right? So let's just take a look at how to find what those overnight margins are, and then we're going to go ahead and look for another trade idea. So I'm just going to go to the CME Group website, and you could always look at the NinjaTrader site or call me or email me or whatever. But when you go to the CME Group website, it'll give you all sorts of ways to navigate toward where you want to go to. And so we really want to find like the micro E-mini futures, what they are, and then you can click on any one of these things and find out. So micro E-mini NASDAQ, that's what we're looking at right now. Let's go ahead and click on that. And we're going to get a new page, which has a menu of stuff. And you could look at the contract specs. You could look at any of this type of information, including margins. Click on margins, and it'll tell us what they are. So for the NASDAQ, for the micro E-mini NASDAQ, the maintenance margin is $1,600, right? So it's $1,600 is the overnight maintenance margin. And what you would have to do is multiply that by 1.1. So I'm going to multiply 1,600 by 1.1. And it's going to give me $1,760. That's how much money you need to put up. You have to have in your account to carry a micro NASDAQ contract overnight, $1,760. Now, if this were a classic E-mini type of, the bigger size contract, it would be 10 times that. It would be $17,600 to carry that one contract overnight. So you could see how it scales, how it's more beneficial if you are doing position trading, even day trading, to consider using the micros. I'm a big fan. I know I'm kind of beating a dead horse right here, but I'm going to keep beating it because it's a really good thing. Bill from Ontario, hello. Raul, everybody I've missed saying hello to. I'm sorry. Randolph, yes, this will be recorded for sure. So let's go ahead and take a peek now. Let's find some new trade ideas. What are we looking at right now? We have a simple candlestick chart, right? Simple candlestick chart. MNQ is the micro NASDAQ contract. 9 means it's a September contract, and 21 means it's 2021, right? Every 3 months, we get a new front month contract in with respect to the stock index futures. Don't have to worry about that much right now. It's pretty straightforward. This is the market we're looking at. This is where all the volume is. And on the candles here, we have a volume profile on the left. I'll go into detail about that. And I have an oscillator at the bottom, right? And the oscillator of choice that I'm using here is called the Commodity Channel Index, or CCI. Excuse me. Now, on the NinjaTrader platform, there is many different types of oscillators to choose from. I'm just kind of scroll down here real quickly, and you can see, we got the money flow oscillator, the McLennan oscillator, the awesome oscillator. We've got price oscillator. There's all sorts of different oscillators, right? And they're all lagging indicators, but what they do is they usually oscillate around a zero line. And you can see I have the commodity channel index here. It's a zero line. It's a red. I colored it red so you could see it, right? And the idea here is If the oscillator goes over 100, then the market is considered overbought. If it goes under minus 100, it's considered oversold. I think that, and that's just kind of a textbook definition. It doesn't really. That's not how I look at this. This is not how I personally look at it. I want to see momentum and how quickly it crosses the zero line. I want to see momentum and see how quickly it goes from a state of positive over 100 to less than 100, and then minus how quickly it breaks down past the minus 100 mark, right? So 100 and minus 100 are numbers that are important to me, but really I want to see how quickly they kind of transition. And in this particular case today, it did it quickly. I mean, we're talking, we were, almost to 200 at 8:30 when the market opened up. And then sure enough, we broke like crazy and this thing just transitioned down. So now we're in a bearish day trade state right now, even though we're in a bullish, the overall market is bullish, but my bias right now is bearish at this point. And so now I'm kind of in a conundrum, right? I'm like, well, if the overall market state from a daily chart point of view is bullish, I want to look for places to buy, right? If it's bearish, I want to look for places to sell. Well, it's bullish here, so I want to look for places to buy. However, the state right now is certainly not bullish. I mean, we have this cornerstone, keystone 840 candle, and it's almost always the 840 candle lately. I mean, this is again my opinion, but the actual open, the 830 open, usually is relatively mundane recently, right? Unless there's some extraordinary number that was released at 730 or something like that. But the 830 candle, and let me kind of just make this so we could see it a little better. This 830 candle is small, right? I could let me go and change my crosshairs. A little annoying. I'm just going to go ahead and use my wheel of my mouse, and you can see the high is 76, the low is 62. But then when you compare it to the next candle, the 840 candle, the high is 83 and the low is 17. So it's much larger candle, and you can see it visually, right? This doesn't take rocket science just to see that this is the dominant candle. This is setting the pace right now. In my mind, this is setting the pace for the day. So now I have a conflict between, do I want to stick with the overall long-term trend, or is today going to be a down day? And right now it's looking like today is going to be a down day, even though we're trying to retrace back up a little bit, but we're not making very much progress doing that. So I'm going to rely on CCI. I'm going to rely on the volume profile and to make these trade decisions right now. And you could add a moving average cross, which is something that it's easy to do. And that's what, excuse me, the other component that I would typically add to this thing. So, and I would do a simple moving average, SMA, instead of doing exponential or Wells Wilder or one of the other ones that are a little bit more advanced. Again, I'm a simple trade setup person. I've been doing this for a long period of time, and this is just how I feel about it. So I'm going to go ahead and add that simple moving average. We're going to change it to, the first one's going to be 26. It'll be my slow moving average. In other words, I'm going to color code it blue. Which means it's going to calculate 26 pieces of information to create the actual line, right? And so now I'm going to add a second simple moving average. I'm going to click on it again, and I'm going to add it again, and then highlight it, and I'm going to make this one a 6. Again, this is user preference, trial and error, experimentation. I'm going to make it red. This is my fast moving average, right? So the 6 and 26 are somewhat arbitrary in my mind, but this is just kind of how I like to look at it. So I'm going to hit the apply and hit the OK. And as expected, the fast moving average across the red line here, hopefully you could see that okay. If you can't, let me know. I'll try to magnify something. The fast moving average only calculates 6 sets of data to create the number. And then the slower one, the 26, is the blue. So we had a cross under, right? The fast is crossing under the slow, right? And it's another indication that, things are a little bit more bearish right now. When you see these crosses, if it's the opposite, there would be a bullish signal. These are lagging. Keep that in mind. They're lagging. Noli asks, what time of day does intraday trading start? That's a great question. It's a 23-hour marketplace. So literally, 5 o'clock last night, Chicago time, is when we started. And we went all night up until, around midnight when Frankfurt, Germany opened up the Eurex exchange. And then we went, into the London Open, as the sun is moving across the globe. We went into the UK Open, and now we are in the US Open, and it goes all the way until 4 o'clock today. So 5 p.m. last night to 4 p.m. today, 23-hour market, only 1 hour break. That's how it works. So anyway, in any event, so from a trade idea point of view, let's consider what we're looking at right here. And again, we're in the micro futures contract, and maybe we scale in. Maybe we do 2 units or 2 contracts. Maybe we'll only do 1. It's completely based on what the charts tell us. Right now it's 9:14, so we're going to have another candle approximately. I'm going to say approximately 5 minutes from now, and let's kind of see how this all plays out. So now from a trade entry point of view, you really have to decide, okay, where am I going to be? Where am I going to draw the line in the sand? Am I going to be long or short? And right now, I'm going to say, let's wait to see what the next candle brings us, right? Let's see what this green candle does. Right now we had a lot of buyers coming in on the previous candle, right? On the 9 o'clock candle, 9:10 candle, a lot of buyers coming back in, pushing this thing all the way back up, pretty significantly. And this tail here kind of shows us that action, right? This tail here shows us this action, pushing us back up. And right now we have the body of the candles are almost the same, right? The red body and the green candles are almost the same, which is an equal and opposite type of formation, right? And that usually means market uncertainty, because when you combine those 2 candles together, you're going to get a doji looking type of candle. And a doji is where the open price and the close price of the candle are at the same or nearly the same. Now, the other thing I'm looking at is, here's a high on this candle, a lower high, a lower high, a lower high. We finally are getting a little bit of a higher high here. So let's see if that's going to also give us some more information on what the state of the market is. We have a low on this big keystone candle here, and then we have a lot of buyers are coming in right here. A lot of buyers. Now, a lot of times these tails do get attacked, so I'm not convinced that we're not going to spend some more time down lower, down around 14,790. But again, let's wait for one more candle before we make a trade decision here and throw a couple trades in. Any other questions or anything, just feel free to pop them in as we go. And while we're waiting, I think I have another chart in the background here. Let's take a peek at, oops, I'm sorry. It's easier to lift this chart. Again, these are all module kind of windows. You could open them and close them any way you want. And this is just a simple daily chart, right? Simple daily chart, E-mini S&P. This is a different stock index futures, but I'm just going to kind of lay it side by side here with the other one. And you could see we've had some price dislocations a couple of times, but we're back into bull mode, right? I mean, it doesn't take a lot to realize, hey, we are back in bull mode here. So I'm just going to do a real quick arrow here. The trend is up. I mean, that thing is going up, and green, higher highs all the way up. Recently we kind of slowed down a little bit the last couple of days, but it was 4th of July weekend and things are kind of, back to normal right now. We do have information coming out today about 2 o'clock Chicago time, which is the release of the FOMC meetings. And we'll talk about that. So John asked a great question, and I do want to answer that. So John says, why 10-minute candle versus something faster? Assuming you mean, a 5-minute, chart, a 3-minute chart, a 2-minute chart, a tick chart, and those are all legitimate strategies, John. In my experience and in my methodology here, I'm looking for a trade that's going to last anywhere from a minute to 60 minutes. So I have a 10-minute chart. I have a 6 times multiplier to get me to 60 minutes. And that's how I'm viewing this particular trade idea that we're about to try to get. So again, that's just my thing. If I was looking at a 2-minute, then I'd multiply that by 6. And I'd say, okay, in the next 12 minutes, I want to be out of this trade. I'm taking the approach, I want to be patient. I want to get 1 or 2 good trades in. If the trade I enter into lasts longer than 60 minutes, that's okay also. But my expectation is it's going to be quicker. So that's just how I look at it. Certainly there's different strategies that work, maybe better than my strategy. Who knows? But it's something to keep in mind. I'm going to toggle over here real quickly to the NQ. It's really easy to on these charts. You just, the NinjaTrader charts are awesome. It's pretty much right click or just drop down menu. I mean, it's not very difficult. So here's a picture of the daily chart for this is bullish. I mean, look at this. This is, again, it doesn't take, I could visually see buyers are taking charge of this market right now, especially since the, mid-June. There we go. All-time highs. We're in bull mode. So the counter trend trade short, which I think we're going to try right now, is a little bit more dangerous, a little bit more risky. But since we're with micros, it's okay. So we have a new one right here. I got a lower high, almost a lower high, not quite, and then a lower high right now here. So what I really want to do is then there's opponent control right here, and I want to I'm going to right click, and we're going to go ahead and just put an order in to sell 1 micro. We got filled right away. We're right above the point of control, right? We're right above the point of control, and we're going to be patient. We're going to wait to see what we want to do. Now, from a stop management point of view, I want to put a catastrophic stop in, right? And since we're short 1, I sold 1. It's going to be a buy stop. Again, I'm going to right click my mouse. I want to use the transition between the value area at the top and the prices above value. So it's that blue versus light blue area. And again, I'm just going to be a little bit north of that. We're going to right click. And since I'm short, it's going to be a buy stop. I'm going to click buy stop market. And there we go. That's so far the anatomy of our trade. There's one more thing we have to do, and that's add a profit target, right? What's a reasonable profit target here? And we're gonna wait a little bit before we decide what that should be. It's we have a lot of time. It's only 9:21, and I think we have a decent entry for our trade idea. Of course, anything can go wrong here at any given time, but I'm feeling pretty good about it. And one of the things I'm really looking at, I'm interested in right now is, will this tail get filled? This wick, this bottom of the wick. CCI is crossing up, getting close to crossing up over 100. Isn't necessarily good for our position, but it's not over yet. So let's see how this CCI kind of goes. The moving average cross is still diverging. It's getting wider, which is good for our position, right? It's good for our position. And this number here in the trade label, I'll call it, to go over, it just shows you how many ticks you're up or down. Green is up and red is down. And it kind of gives us a reminder of our position. While we're waiting for a couple seconds here, let's, yeah, there is a recording available. And I'll give you my contact information too. If you can't find the recording, it'll be on YouTube. Just feel free to reach out to me directly and I'll shoot you out the link with respect to the recording. Usually that means you're leaving live, which is fine if you do, which make me sad a little bit, but that's okay. I'll get over it. So Craig asks, can you do one cancels the other orders? Absolutely, you can. There is a significant amount of what we call ATM strategies. You could do from the trading dome. I don't have the trading dome up right now, or from here, and you could customize them. And this little box doesn't look like much, but believe me, there's a ton of stuff you could do here with order cancels orders, trails, and all that stuff. I'm going to save that for another demonstration because we'll be deep in the woods once we start doing that. But the answer to your question is absolutely. That's what makes NinjaTrader kind of powerful. To have those ATM strategies there. Great question. Thank you for that. Thank you for that. So yeah, RR asks, do all of these strategies apply to normal NQ futures as well? That is what I trade. And what is the difference? Okay. Yeah. So what I'm setting up right here, is kind of a universal simple trade strategy, right? It's a universal simple trade strategy. There's no this isn't specific to the micros, and things are going our way right now. I do want to test this bottom here, so we're going to go ahead and just do a buy limit. Order submitted. And I have it just above the low, right? And I'm going to move it up just a tad bit. And what I want to see is I want to see us getting down to the bottom of these two candles right here for our profit target, right? And I feel pretty good about that. So let's see what happens here. We'll just kind of let that ride right now. Sorry about that. I got distracted. So this thing with the volume profile, order flow volume profile, moving average cross, and the CCI or an oscillator at the bottom. It doesn't matter if this is a micro NASDAQ, a classic larger size Nasdaq, if it's a crude oil market, if it's a bond trade, if it's, it doesn't matter. What matters is, we know what the macroeconomic releases are for the day. We know what the bias of the market is. We know what the keystone or cornerstone candle does. And, with all that information coming forward, this is I'm not overanalyzing anything. Right now, there's ways to add more indicators and more things to give you areas of interest, but that's not particularly, that's just not me. That I'm simple. I'm not saying the other way is wrong. I'm not saying you can't find a niche and be good at it, but you should find a niche and be good at it. The one thing you should do is look at one or two markets, look at one or two time frames. Whether it's you're trading the open, the pre-open, or after the open. And become an expert at that. Become good at that. That's kind of what I'm going to suggest. Okay, so yeah, simplicity. It's really easy to just get into this whole. Okay, so we got filled there. So that was a good thing, right? So we sold one again. We're in practice mode, demo mode. We bought it back down. This candle, we bought it back lower, right? Futures trading, you could do that. You could sell instead of buy, or you could buy instead of sell, whatever you want to do. And you could do that, and that's kind of what we just did. And so it worked out, right? It worked out. Now, the one thing keep in mind, I still have my stop up here because I didn't do an ATM stop. Cancel it. You could either cancel it by clicking on the X, or you could close this, click the close button over here. But let's get it canceled because you don't want to get an extra fill, right? You do not want to get an extra fill. Okay. And if you want to see where your trade entries are, you could right click and you can go to data series. And way at the bottom, you could plot them, right? Text and marker, hit text and marker, hit apply and hit OK. And it'll show you, where the trades that we made today, right? It'll show the trades that we made today. So that's kind of a cool feature. Even get a little arrow there. I'm going to go ahead and erase that just so it doesn't clutter up the charts. What did I do? Did I do that right? Yeah. I'm going to go all the way to the bottom. Do not plot. Hit apply it. And okay. All right. The control bar up here gives you information on your orders, what they were, what the status of your orders were, executions, accounts. It gives you your accounts. It shows you your gross realized P&L. That we don't have an open position, so we close them. We don't have unrealized. Unrealized is where you have an open position and it's going, right? It's moving around in real time. And so to calculate your total P&L, you would use your realized P&L plus or minus your unrealized P&L equals your total P&L. We don't have a position right now, so this is our realized P&L on the day. And remember, some of that carried over from yesterday, so let's not pat ourselves on the head too much. But that particular trade idea worked out good. A lot of questions. Aaron says, am I saying it right, Aaron? I want to say Orion, but it's Arian. So I'm going to say Arian. No, I'm not leaving. I'm driving. Don't drive and type in the chat at the same time. Please. I don't want you to get a parking ticket and then send it to Jim Cagnina at NinjaTrader. Say, hey, driving ticket. I got this moving violation. It's your fault. please pay the $125. No, don't do that. Pull over to the side. Okay, so Opal says, not sure you said it before, but how much is a contract on the buy side and also on the sell side? So in this particular market, this is a micro market. Keep in mind, here's the process, Opal. You fund your account with a certain amount of money, a certain amount of risk capital. Only fund with risk capital, but you're going to fund with risk capital. I'm going to make up a number, right? And I'm going to just say you funded with $1,000, right? So you have $1,000 in your account. When you place a trade, one contract in this micro market, and I'm just going to randomly click right now. This is not, don't follow this at home. When you place a trade, if I were to sell a contract here, I would use up $50 of my day trade margin. $50 of my day trade margin. So of $1,000 in my account, I really have 950 free and clear for another contract. So if I did a second unit, let's just say I decided to sell a second one. These aren't filled yet. These are orders that I sent to the exchange at different prices. But if both of these get filled, then I have two contracts, right? And my day trade margin now is $100, right? So it goes from out of the 1,000, now I have $900 in free margin available to me. So that's if that's your question, that's kind of how you do it. Dave Snyder asks, can I hold a micro S&P 500 from 6 p.m. Central Time to 4 p.m. for the $50 margin? So if I understand your question right, yeah, the margins are good throughout the session. It's a 23-hour session. So yeah, the answer is yes. Sometimes in busy market conditions, the nighttime day trade margin gets raised a little bit, but nowhere near usually the overnight margin. So there is a market condition factor on day trade margins. When we're having, we had some exceptionally volatile times. When COVID first. All right, so we just got another order filled. That's a $50 worth of margin right there, right? We're short another one, right? And again, this was just a random trade idea. I just wanted to show you conceptually how that works. Okay, a lot of questions here. Let me start getting to them. RRS, I've noticed that certain opens particularly have more conviction than others. Is there any way we can typically spot this beforehand? No. No, if we could spot it beforehand, man, we would have a huge edge, right? We'd have a huge advantage. We could do breakout bracket trades. We could enter on stops. We could do all sorts of stuff as we go. But that's the tricky part. You'll have a feeling sometimes, and let me just kind of pull over. This is a good opportunity to show my my cheat sheet here. And actually, while we're doing that, before we do that, I want to put a profit target in for the second unit. Again, the market's still kind of going down. I want to make a new low here, and so we're going to go ahead and buy one. Buy one back right here. So let's see if we can make a new low here. We're up about 10 ticks now on this particular trade idea. My notes, I do this every day. Wednesday, July 7th. We had, these are the planned economic releases, right? So, just go to the CME Group's economic calendar, or go to Econoday or Forex Factory, or wherever you want to go. These calendars of economic events, these are planned, right? These are things that are planned. And we know about it ahead of time. Now, we don't know what the actual release is going to give us in terms of a number, but we do know what the economists kind of project, or the consensus for that number is. And then that kind of is the gauge to see when the number comes out, is this going to be a market mover or not be a market mover? And I would argue that the only thing that could be a market mover today is the FOMC minutes, and we'll talk about that in a second. Mortgage applications, is MBA mortgage application. It's a survey conducted by the MBA mortgage folks. And I just cut and paste from their website, and it's, mortgage applications decreased 1.8%. This is a survey that is best utilized when you track it Okay, so we got filled on that one unit. Sorry, let me do some trade management here. Again, I don't, this second unit we never got. I'm not interested in it, and I'm done. Now, the other thing to keep in mind here, before I go back to my notes and my cheat sheets, this is a very, very bearish looking morning. And, the counter trend people, and I'm not a counter trend fan. Every time we try to do one in here, we get schooled. Sometimes it works, sometimes it doesn't. But the instinct is, I want to buy one right here because the market can't go any lower. Because it's already come down so far. It can't go any lower. The market can't go any lower. I'm going to buy one here. Yeah, it can go lower. Don't say that out loud. It can go lower. It can go higher. It can go lower. It could go sideways. Who knows? But be careful in that thinking. Right? Be careful in the thinking. The CCI is still pretty negative. It's minus 169. If you had a MACD, you would see something similar. The moving average cross is still, red might have been a bad choice of colors, but it's still pretty, it's still diverging, right? We're still making new lows. So, don't be trying, in my opinion, trying to buy one right here could be more risky than it's worth. Anyway, that's just a side note. Let's go back here to so again, let's look at the trend for the MBA mortgage applications. You could chart those and see if the trend going up or trend going down. And last week was up 6%. Week before that down 1.8% again. So you kind of look at the trend there. And why is it important? Because everything stems from the FOMC, in my opinion, with the stock index futures. You've got FOMC is the Federal Open Market Committee of the Federal Reserve Bank system. And they're the ones that set the policy. They're the ones that set the federal funds target rate. They're the ones that kind of are in charge of what interest rates are going to be for everything, for mortgages, for credit cards, for car loans, for treasury products. Everything is kind of based on that. Everything feeds off of that, right? And right now we've been in a nearly zero interest rate environment forever, right? The Fed's trying to, still trying to, stimulate the economy, and that's one way they do it. So by looking at this, by looking at the supply and demand for mortgages, part of that component is how many people think interest rates are going to go up, and they want to lock in now, or they want to refinance now, or they want to buy now, right? They want to take advantage of the lower interest rates while they're here. So that's why I look at that. JOLTS. By the Bureau of Labor Statistics does not stand for push or shake someone or something abruptly and roughly. It stands for job openings and labor turnover survey, which is, it's a number that's interesting. And it came out at 9:00. I was setting up for the presentation, so I don't have any stats on it. I don't know if it was good or bad. That's another important number. And then the FOMC meetings are, from the previous meeting, they're released. There's a delay released in them. I don't expect any surprises here at 2:00 Eastern time, because every single Fed president, there's 12 different Fed presidents running around doing speeches and telling people what they said during the meeting. So I don't expect any surprises there. But it's something to keep your eye on. 1:00 Chicago time, 2:00. Okay, so those are my notes, really. There's some other stuff on here. When we're going to talk a lot about crude oil, especially with the release coming up next week of the micro crude oil futures. It's going to be very good, in my opinion. I don't have a crystal ball here, but based on my experience and just being an old guy in the trading arena, the micro crude oil contracts will have some oomph and kick to it and give us all sorts of possibilities. And we'll explore those in more detail as we get through the summer once they ramp up. Again, July 12th is the date for that. Okay, let's go back over here. So let me scroll up though, because I feel like I'm missing. Rob says, hi, Tim. I'm Jim, but that's okay. You're close. You're pretty close. My wife calls me worse. Joined a little late. Can you talk to the CTI indicator and why you're using it? Yeah, it's just an oscillator I like. You could use any oscillator you want, but oscillators give you momentum and direction, right? Momentum and direction. And the faster that we cross zero lines, the faster we cross either up or down the markers for overbought and oversold, the more information that I get, and it says, okay, this market's on the move. This is trending, at least for now, in a certain direction, which is a very important piece of information for me. Okay. So let me scroll up here a little bit higher. All right. Thanks for that. Thanks for that. I think I answered that question. Bear with me here. I'm a little bit challenged in the chat box. We have a chat box here on Zoom. I think I got them all. If I missed something, type it in again. So, and I apologize if I did miss something. Getting closer to the bottom of the question board. Bear with me 1 second. Okay, so Opal asks, the contract prices are different on the ZB and ZN. Yes, they are different on the ZB and the ZN because they're two different markets. So the ZB refers to and we could pull that up here. I think. Let's see, we've got ZB here. ZB is right here. So the ZB, this is the 30-year U.S. Treasury bond. And, U.S. Treasury bonds are issued by the United States Treasury, and they are a way to finance government operations, right? It's a debt. It's a debt instrument. There's a futures contract on it. This is it. It's the 30-year. There's more than just one, but the 30-year Treasury bond is what we're looking at right now. The other market that you're referring to is the ZN, which is the 10-year notes, the 10-year note market. And it's just a shorter duration Treasury instrument, also issued by the Treasury Department. And it's just a shorter duration. It's a 10-year instrument instead of a 30-year instrument. Now, neither of those two are completely 30-year instruments or 10-year instruments, because their maturities could vary, right? Their maturities are closer to 23, 24, 25, 6 for the 30, and then the 10-year, the maturities are actually less. So they're not true 10-year notes. It's not true 10-year bonds, but I'm getting in the weeds there by telling you that. And the reason I'm telling you that is there's an ultra 30-year bond, which is more of a true 30-year bond, and there's an ultra 10-year note, which is more of a pure 10-year note. But the difference between the 30-year and the 10-year, they're two different markets, right? They're two different pricing based on the actual bond prices, right? So that's why they're different. And a lot of people trade the spread. You could do that here. A lot of people, they leg into a spread. They'll buy the notes and they'll sell the bonds, or that spread changes, right? The yield curve, it's called. The yield curve changes over time. It gets steeper. It gets less steep. Sometimes it could be inverted. It could be negative. So we're kind of way off the mark here. So, but in any event, they're two different markets. That's all, and they're driven, and they behave differently, and they have different times when they move more and more. And we could explore ZB and ZN in future webinars, and talk about those if you want. Again, send me an email. I'm going to give you my email address. Give me feedback. Give me things you want to cover. Someone's talking about RSI right now. Hang on a second. I'm just going to cut and paste my email address here while I'm thinking of it. As an example, Joe says, hey, CSI versus RSI, right? And, we talked about a little bit about RSI last week, and I promised to, dedicate a future event, and I'll try to do that sooner than later, and talk about RSI, what it is, what the equation is, best practices on using RSI, and how it could help give you trade ideas. So, Joe, let me do a little bit more homework. I don't use the RSI. The relative strength index, and I'm not 100% a master of it. So I will be, though. So I'm going to make that a note for our next event. Get some RSI training, and let's talk about it with Joe. Okay, so Don asks, what are your criteria to exit a trade? So again, it's based on the candle. It's 100% based on the candle. We're supply and demand. And what's the candle telling us right now? So right now, this candle is this is a down, 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 down market, right? I don't see any, there's no impetus for me to change my mind right now. We're just going to wait. And, the couple of trade strategies here are wait for a pullback and try to get short again, or go short and, have a reasonable stop in. Now, the candles tell me where areas of support are and areas of resistance are. Right now, in this particular market, there's no area of support. I mean, we've dug down, we hit rock bottom, and we're still digging. So, that's what's going on. So, no support, no place to put, to give me an indication of entries right now. The only indication I have, is, all right, if I'm going to draw a Fibonacci line, I'm going to go to Fibonacci retracements, and I'm just going to kind of eyeball it. So it'll be rough. It won't be perfect. And the problem with doing a fib line right now is you keep making new lows. You have to keep adjusting it. But right now, the first retracement level in my mind is 38.20. So that's an area of interest for me. And I'm going to line it up with the volume profile. And it's going to be, way below the value area. So it's a little tricky right now to come up with exactly where, if I were short right now, where my stop would be. But that's the area I would look at, somewhere between 38 and 50. And it depends on how aggressive you are or not aggressive you are. So I'm just going to go ahead and, let's just, for fun, I'm just going to, don't follow me at home, but I'm just going to sell one at the market, right? I just sold one at the market. And that's where I got filled at. Now, from a stop point of view, and since it's a micro, I have a little more flexibility here. And I'm going to use the fib line. I'm going to use this, the value area here. And I know the value area is going to change. It's going to pivot as more volume is accumulated south here. But right now, that's where I'm going to put my stop, right? That's where I'm going to put my buy stop. Order submitted. So that's how I chose that level, purely on fib, purely on volume profile. There's nothing else to go on. There's no support or resistance here for us to really, really focus on. So it's unique. It's pretty stream. And this is why I don't go market orders ever. I mean, we sold at the low. So that's not a best practice in my mind, entering positions on a market order. But for demonstration purposes, I just wanted to throw that up there. So hopefully that helps. I mean, the whole point of these events that we do on Tuesday, Wednesday, Thursday is to try to interpret the candle and come up with, fine tune our best practices and try to identify areas of support and resistance and do some practice trades, see how it works. Okay. We have a hello from Russia. Moscow City, thanks for coming. Appreciate you being here. Just another kind of trick here too. If you do want to close a position quickly, you could do that by clicking that close button. Clicking that close button right there. Okay, let's see. I think we're caught up on questions. And Donna, so I think you'll understand me a little bit better as you come to more and more of these, and we find a market that's not that doesn't trend like this, and then we'll be able to I can kind of explain how I kind of look at these areas of support and resistance. RRS, any correlation between London and US opens? It is worth noting what London does before opening the US. This is a great question. Let me show you my recent experience with this idea. I'm going to go back to my notes. And the other thing I do in my notes is I add like real notes, like what we did right and what we did wrong. And ideally, you'd write this, you would use a pen and paper to write it down at, because you'll remember it more. But I've been typing it in for the presentation. It helps me. So here is one note. If this was from a week or two ago. Pre-market trades should remain pre-market trades, right? So we had a, oh, I'm sorry. European benchmark candles don't always follow through. So this is exactly what you're asking. We had a big red candle on the European Open. And even though I was bullish for the day, I saw that big, it was an extraordinarily large red candle. And I thought, all right, this is setting the pace for the US Open. And sure enough, it did the opposite and we got smacked. Smacked is not a good thing. It's a technical term for badness happened to us. So it was important enough for me to write it down. And I've seen that before, that behavior before, where the US market sometimes does something different than the European market. Now, it's good information to have for sure, but I wouldn't rely on that exclusively, right? Exclusively. In any event, that's my answer to the question. Not necessarily. All right, so cruising through the questions. I found this on Instagram. Where could we find a calendar for future presentations? That's a good question. There is a web page set up for this, and I'm going to go ahead and show you where it is. This is it, and I'm going to put it in the chat. It's every Wednesday, 10 o'clock. Just come to this link. If you actually, you know what, come to think of it, now that you've done this already, you're going to get an invitation every week. This is a recurring thing. So I think the way Zoom works is you're going to keep getting the invitations until you say, I don't want them anymore. Jim is off his rocker. I don't understand a thing he's talking about. I can't take it anymore. But so I think you're going to get those just by virtue of the fact you're here today. All right, it's 9:50. I am going to wrap up soon. I want to throw a couple of other links into the system here. If you haven't already and you want to try this software with real-time data, 14-day free practice account, here it is. Click on that link, and this is the one I just put in the chat box in case you can't see that. You know what? Actually, I'd take that back. Well, yeah, that's fine. Open an account, or you could just go to the NinjaTrader.com website for the 13-day practice. Open an account link is here, and I'm going to put my my email address again, and then I'm going to put my phone number. People are like, what are you doing putting your phone number in there? I do a bunch of stuff in the day. And to be honest with you, I'd rather be talking to you guys about trading than the other stuff I have to do. Don't tell my boss that. Don't tell the management team of NinjaTrader that. But I feel free to reach out. Just give me a half hour after the event's over to refill my coffee and water, get a snack, and then we'll be in good shape. So that's how you get a hold of me. Feel free to reach out. If I missed the question, send me an email. If you want me to cover a different topic next week, send me an email. Those kind of things I'm all for. So let's go ahead and just finish up by looking at where we're at here with respect to the candles on this chart. CCI minus 203, still pretty negative. Moving average cross from here to here, still diverging. I'm still bearish. The previous candle is has a giant wick at the bottom. Buyers came in, pushed this up. Think of a piston, right? 950 candle right now is reacting to that. Kind of not sure what to do. We have a lower high, a lower high, a lower high, and still a lower high. We'll see if that holds. Lower low, lower low, lower low. We'll see if we can get a new lower low. So from an overall point of view, this again, it's everything I'm looking at here is bearish right now. A counter trend trade, I think, will be a little risky, but maybe things are going to settle down. And then when things settle down, after you have 2 or 3 candles, again, this is my opinion, we'll eventually have an area of support, right? And I'm going to draw a rectangle because I think areas of support aren't just one number, but they're literally a range, right? And again, I don't know exactly. This big wick here is kind of making it funky, but when we start closing below this is no longer going to be support, and it's not yet. I want to see 1 or 2 or 3 more candles that close above this rectangle before I declare victory on making that statement. Okay. All right. I do want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that's an equation for opportunity, it's also an equation for risk. Take it easy on the day trade margins. Use it gingerly, when you need it. That's why we offer low day trade margins, so that you have that convenience. Right? Risk capital only, past performance not indicative of future results. Everybody who's been following me knows I have some winning days and some losing days. That's just the way it is. And then lastly, we're on a real-time practice account today, trading in sim mode. Feel free to reach out to me at any time. And I do want to leave you all with this. Be safe out there and be good to each other. Take care and thanks for coming.